Okay, hi everyone. Hi.
Okay, yeah, they've started it on Vantage app. Okay, hi everyone. There's 800 plus of you as usual. I see the chat moving already on Vantage app.
Okay,
yeah. Okay, sorry, I'm gonna mute that. Everything's working fine. Screen is working. You guys can hear me. Okay, cool. I'm gonna start because I've already eaten like 5 minutes into this 1 hour. Hey everyone, welcome to today's webinar brought to you by Vantage. Right, we're gonna do Elliott Wave series part 3 of part 3, practicing your wave. So obviously I wasn't the one who did part 1 and part 2. For those who joined part 1 and part 2, I was not the one, but I'm doing part 3. I'm not sure what was covered in part 1 and part 2. I'm just covering the person that was supposed to do part 3 today because she is away for medical reasons. Okay, but that's okay. It doesn't matter because I'm still gonna cover everything. I'm still gonna cover part 1, part 2. I'm gonna do recap of the entire Elliott wave strategy so that you guys are not lost. So for those who did join for part 1, part 2, can you let me know in the chat box if you did join, if you didn't join, or if you've never heard of Elliott wave before, if you're familiar with Elliott wave, just let me know in the chat box so I know where you guys are standing with Elliott wave and I know how fast or how slow I should be going. Okay, cool. Didn't join. Okay, some of you say you didn't join. Some of you say never, don't really know about Elliott Wave. Okay, cool. I think majority here are beginners. So even though we're already at the third part of this Elliott Wave series, I'm still going to do a recap of the entire thing so that you guys are not lost and will have an entire idea. Okay, so moving on, I'm gonna touch on the disclaimer. Right. This disclaimer, I'm gonna have to stay here for a minute so that you guys can read through, like a minute or maybe 2 minutes, so that you guys can read through. Basically, the disclaimer is saying that this webinar is purely educational, okay? You should not take this as any form of investment advice, trading advice, or any form of financial advice, okay? Trading, Forex, and CFDs, especially on margin, carries significant risk and is not suitable for all investors. You may lose more than you initially plan to. So please be cautious when you are trading, okay? Please be cautious when you are trading. It is not for everyone. Okay, it's really not for everyone. Right? Only risk whatever you can lose, okay? I'm gonna stay here for a minute so you guys can read through. By the way, guys, I just want to remind you guys that past results do not guarantee future results. I say this because I think I've done these webinars for you guys a few times, and I always tell you guys, okay, this week I did 4%, this week I did 6%, or this week I did 1% or 2%, whatever it is. There are weeks where I'm very profitable. There are weeks where I don't trade at all, and there are weeks where I'm not profitable. So just because you are profitable one time, it doesn't mean you're going to always be profitable. Because I know why people are losing so much money in trading as well is because they see a little bit of success and they're like, okay, I'm getting good at this. And then they go all in and they lose the entire account. So please don't do that. It's really, really risky. It's really dangerous. Please don't go and borrow money. Please do not get a loan just to get into trading. It's not gonna make you rich overnight if you are treating it like gambling. Okay, so I'm gonna move on and introduce your host, which is myself. My name is Cassandra. You guys can call me Cass. I'm an investment analyst at Everest Fortune Group. Everest Fortune Group is a research firm that specializes in backtesting, forecasting, basically just anything to do with the markets. Okay, we have been the finalists for the best Forex and best equity research for multiple years running. Okay, yeah, our team is we spend a lot of time on the charts. We study it a lot. We study technical analysis a lot of the news, a lot of the materials you see online are actually churned out by our team and prepared by our team. So you are in good hands and you guys can ask me any question you want regarding technical analysis. I mean, Elliott Wave, of course, today's topic and technical analysis because that's what I specialize in. If you want to ask me about the news, when I say news, I mean like fundamental analysis, it will be a little harder for me to answer because the news will take time for me to like sit down, look at it, and I need to decipher what the news is saying. But other than that, when it comes to technical analysis, I should be able to help you guys immediately. And again, not one person in the market would know everything to do with the market. Like there's so many technical indicators out there. So if you ask me something and I can't answer you, it's probably because it's not something I usually use to trade. So anything I share with you guys in this webinar is purely my own experience in trading and basically my own strategy, okay? So please know that trading is a very personal journey and a different trader might trade differently. Okay, so I'm gonna move on. So our agenda for today will be to do Fibonacci recap, the top-down approach and the magic of correlation, Elliott wave targets, and finding potential opportunities. So let's do Fibonacci recap. Okay, so before you even master Elliott wave, you do need to master Fibonacci. The Fibonacci that is mostly used in Elliott wave is going to be the retracement, right? And the projection. So expansion and extensions are not used that much in Elliott wave, but mostly, I mean, you can kind of use extensions if you want. Hold on, give me a sec. I need to think about this. Yeah, no, it's mostly expansions and projections, right? So these are the two that you want to focus on. These are the two you want to focus on. I'm just going to explain a little bit about it so that you guys are not completely lost, especially for those who didn't join part 1 and part 2. Okay, so retracement is basically finding a V pattern on the chart. So you go on the chart and you find like a V pattern. It kind of looks like this, right? A V pattern. Or it can be an inversed V, so V. So it can look like this as well. So it can be mirror image the other way around, depending of whether price is on an uptrend or downtrend. Okay, so you're gonna take this top part and this top part to find 5 levels within here, or like the levels within here. So let's say price is at $10 here, and here is at $0. It's very simple actually. If you think about it, if I say price retrace, sorry, that is not a good representation. Let's say price is at $0 here and at $10 here. Okay. I'm gonna erase that so that you guys are not confused. Okay. And I say, oh, price retraced 50% of the last swing high. Okay, so 50% of the last swing high, 50% of the last swing high will be at $5. That's all it is. Retracement is basically the percentage of price retracing from the 2 points that you took. Okay, so if you took 1 point at $0 and 1 point at $10, 50% of that is $5. If it retraced 61.8% of that, it is at $3.82, right? If I didn't do my math wrongly. Okay, it's basically just a retracement of the percentage. So it's very simple to understand when it comes to retracement. Similarly for projections, let me grab this. Projection, you want to find an N pattern. The N pattern can look like this, or it can look like this, whatever it is. Okay, you're gonna take point 1, point 2, and point 3 to project where price is going to land. Okay, to project where price is going to land. Okay, a lot of times we look at the 100% or the 161.8%. Okay, so for those who don't know how to use Fibonacci, this is just the 2 simple things. You're basically finding the levels within here. Here's 50%. Here will be 61.8% from the top and the bottom that you choose from. And then for projections, you're using 3 points. Okay, so when it comes to Elliott wave, there are different levels to look at that are important. 61.8 is usually a very important level. 161.8 is usually a very important level. Okay, so that's all you need to know for now. I don't want to go more in depth because that's going to take a lot of time. We do want to cover today's topic. So basically, again, for Elliott wave, you need to master retracements, and you need to master projections, okay? You need to master retracement and projections on Fibonacci to master Elliott wave. Okay, so yeah, master this first. Okay, cool. Hi, for those who just joined. Hello, for those who are asking me questions on Vantage app. Let me just cover a few more things before. Let me just type this. I'm just going to type something on the Vantage app. Hey guys, I will answer your questions in a bit. Okay, so we'll just cover as much and I'll come back to your questions in a bit. I'll just answer one right now. So what makes Elliott wave different from other trading methods? Okay, Elliott wave is a unique. Okay, let me think about this. Elliott wave is unique because it doesn't tell you where price is. It suggests where price could go next. It kind of maps out market psychology in waves, okay, showing when the crowd is euphoric, fearful, or consolidating. So it's not just a pattern, it's about understanding cycles of investors' emotions. So Elliott, I really love Elliott Wave because you really can forecast very far into the future of where you think price is going based on the waves. Okay. Okay, so let's just continue with today's topic. So let's talk about the three golden rules of Elliott wave that you cannot break. No matter what, you cannot break this. Okay, you need to remember this. I'm not sure what was taught in part 1 and part 2, but you need to remember this no matter what. If any of these rules are broken, that means you are on the wrong wave count. So let's go through them together. Okay, the first one, wave 2 cannot retrace more than 100% of wave 1. What that means is wave 2 cannot go below the start of wave 1. Okay, that's all it's saying. So it cannot do this and then this. Okay, it needs to do this and then it cannot pass the starting point and then it just continues with its move. Okay, so wave 2 basically cannot pass the starting point of wave 1. That is the first rule in Elliott wave. This cannot be broken no matter what. Okay. Next, wave 3 can never be the shortest of the 3 impulse wave. So impulse wave is wave 1, 3, and 5. Okay. Wave 3 cannot be the shortest. It doesn't have to be the longest, but it just cannot be the shortest. Usually wave 3 is the longest, but not all the time. It's just most of the time it's the longest, but it doesn't necessarily have to be the longest every single time. The next thing is wave 4 can never overlap wave 1. Wave 4 cannot overlap wave 1. So you see this swing high of wave 1. Wave 4 cannot surpass or cannot touch that zone, okay, at all. It cannot touch this zone at all. So it needs to do this. Then missing wave 1 and continue. So this is wave 4 cannot touch this zone, and wave 2 cannot surpass this zone, and wave 3 cannot be the shortest. Okay, everyone good for now? Can you guys let me know in the chat box if you guys are confused, if you guys need time to digest, if you need me to repeat anything? Let me know in the chat box, especially those who are on Zoom, Andy, Gula, Romoa, Richard, Muhammad, Joash, Bob. If you guys need help, I'm focusing more on the people on Zoom because there's 800 of you on the Vantage app and the chat keeps moving, so it's a bit harder for me, but may I do see your questions? I understood all of this from part 2. Okay, so some of you did attend part 2. Okay, thank you so much. Okay, for those who are still confused, let me just remind you why we're even looking at waves. So a little backstory for those who was not here for part 1 and part 2. Okay, so there's this guy named something Elliott. I can't remember his first name. Okay, Elliott guy comes on the chart. He's a trader, right? So he goes on the chart and he notices that price keeps moving in 5-wave patterns. It keeps moving and it keeps moving 5 waves. 1, 2, 3, 4, 5, followed by 3 down, and then followed by 5 again. So that's what he notices. So now basically what I'm trying to help you guys understand is how to identify those 5 waves, how to know if you are counting on the correct 5 waves, and yeah. So this rules is very important. Okay, moving on. Give me a sec. Am I on the wrong slide? Okay, sorry, I guess I accidentally mixed up the slides, but yeah, we'll just ignore that part. Okay, so now we're gonna do the top-down approach of Elliott wave. Okay, so Elliott wave moves in 5 waves. 1, 2, 3, 4, 5. Wave 2 and wave 4 are corrective waves. So if we are on an uptrend, 1, 3, and 5 are going to move in the direction of that trend. If we are on a downtrend, 1, 3, and 5 is going to move in the direction of downtrend. Okay, 2 and 4 are corrective. That means it's always the pullback wave. Price is going to pull back at 2 and 4. Okay, why is there this zigzag below it? Because within 1, 2, 3, 4, 5, there is 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. And within 2 and 4, there's going to be A, B, C, or W, X, Y, or whatever it is. A, B, C, and then A, B, C. Within A, B, C itself, there's going to be A, B, C, A, B, C, and A, B, C. So there's always going to be subwaves within subwaves within subwaves. You need to understand this because if you do analysis on the weekly charts, for example, and then you want to go down on the daily, just know the daily will be the subwave of the weekly. Okay, and the H4 will be the subwave of the daily. Okay, I'm hoping everyone understands so far. By the way, guys, I didn't mention earlier on, I am a Elliott wave trader. This is the tool that I go to. Look, every week you guys come onto these webinars and we're constantly teaching a different topic, right? But sometimes we teach a topic that we ourselves use, but we don't specialize in it. I specialize in Elliott wave, so this is a topic I'm really excited about because I use it on a daily basis. Okay, so the complete Elliott wave is basically impulse followed by correction. This alone should be a wave 1, follow a wave 2, and then you're gonna start with a wave 3. Okay, so that's how it looks. Okay, so wave 1 is usually subtle and it is the early move. So we don't usually trade wave 1 because it's hard to spot. You don't know if wave 1 has already started. Wave 2 is the deep pullback. So it usually pulls back to at least 50% or 61.8%. Okay, 50% or 61.8%. Wave 3 is the strongest wave. It is the big volume, but it doesn't have to be the strongest wave every single time. As long as it's not the shortest wave, that's okay. These, by the way, guys, are just guidelines. Okay, guidelines means that even if you don't follow it exactly, it doesn't mean you are on the wrong wave count. But when we talk about guidelines versus the golden rules cannot be broken no matter what. Okay? Okay, so wave 4 is the sideways or triangle. I'm gonna quickly finish this slide so that we can go on the charts and I'll show you certain charts very clearly what Elliott wave looks like on the charts. Wave 5 is the final push and the divergence often seen. And then you start with ABC often in 3 waves. Okay, often in 3 waves, but not all the time. Sometimes it can do DXY, A, B, C, D, E, whatever it is. Okay, the wave 2 and 4, which are the corrective waves, come in multiple variations of correction. But wave 1, 3, and 5 always, always, always moves in 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. Okay. 1, 3, and 5 will always move in 1, 3, 4, 5. But wave 2 and 4 comes in many, many variations. That's why we do not try to trade wave 2 and 4. It is safer to trade wave 3 and wave 5. Okay. It is safer to trade wave 3 and wave 5. Okay, I'm gonna move on. Common mistakes in wave counting. Okay, so yeah, I did this on purpose because I do want to see if you guys are still following me. Can you guys let me know in the chat box what the 3 golden rules are? Can you guys let me know in the chat box what the 3 golden rules are? Don't worry, I'll be able to finish everything in time, but I just need to make sure you guys understand what I am sharing with you guys. It is very important. Okay, I've got answers coming in already. 3 cannot be the shortest. Yes, thank you very much. Anyone else? I just need the 3 golden rules. Wave 4 cannot go into the zone of wave 1. Okay, thank you very much. And the last one will be wave 2 cannot surpass wave 1. Okay, cool. So now that we got the 3 golden rules, you guys remember it, right? Okay, 3 needs to be the longest. I'm gonna, yeah, I probably should have typed this down. 2 cannot surpass 1, and 4 cannot go into the zone of the top of 1. Okay. Okay, so can you guys let me know in the chat box if this is a correct wave count? If A is a correct wave count, and if it's not, let me know why. If it is, just say yes. Sorry, this is not longest, it is shortest. Just want to make sure everyone is still following me. Thank you so much. I've got answers coming in already. Okay. Thank you, Romuald. I'm sorry, I don't know if I'm pronouncing your names correctly. Thank you, Muhammad. Thank you, Ryan. Thank you, Ting. Okay, you're right. Wave A is not a correct wave count. Why? Because 4 has overlapped 1. 4 cannot go into the zone of 1. So thank you very much. You guys are paying attention and you guys are following. It makes me really happy. I just need to make sure you guys get this, okay? Okay, B. Do you guys think B is the correct wave count? If no, let me know why. Okay, I've got some of you saying yes. I think you're still confused. Okay, thank you for the rest of you who has answered. Okay, thank you, Gila. Thank you, Roman. Thank you, Ting. Thank you, Brian, Muhammad. Thank you, Josh. Okay, yes, this is a wrong wave count because 3 cannot be the shortest, right? So we don't know for sure, right? Because I'm not measuring, but one look, it looks like 3 is the shortest. We're just gonna assume 3 is the shortest here. Actually, it really looks like 3 is the shortest. Therefore, this is not the correct wave count. This is very, very important in Elliott wave because if you are on the wrong wave count on Elliott wave, that means your analysis is gonna be wrong and that means you're gonna be losing money. So you need to be able to identify correct wave counts. Okay, C. Do you guys think that this is a correct wave count? Okay, thank you so much. Yes. Okay, first of all, it has been mislabeled wrongly. So the things that are commonly done is mislabeling a correction as an impulse or whatever it is. These are all the common mistakes, forcing wave counts to fit bias, ignoring higher time frame structure, and breaking Elliott's core rules, over complicating charts. So first of all, this has been labeled wrongly. It should be 1, 2, 3, 4, 5. Number 2, it is wrong because this, which is supposed to be 3, it should not be the shortest. Again, this is the shortest, so this is wrong. Okay, D, do you guys think this is the correct wave count? Thank you so much. I've got answers coming in. Thank you. Thank you. Thank you. Okay, yes, it is the correct wave count. So it didn't break the 3 rules, which is 3 is not the shortest because 3 is longer than 5. 2 did not surpass 1 and 4 did not overlap 1. Okay, so this is the correct wave count. And E, do you guys think this is the correct wave count? Let me know in the chat box. Okay, thank you so much. Sorry, I do need to go faster now because I am afraid I run out of time. Okay, 2 has surpassed 1, so this is not the correct wave count. So out of these 5 wave counts, only 1 is correct. And this is important because you're going to go on the charts and sometimes you are going to count the wrong count and you're going to lose money. Okay, so the magic of correlation. How are you going to use correlation? You're going to use it with the guidelines. So right now, you see the 5 wave counts, right? You see the 5 waves counts, and you just don't know if you are on the correct wave count. How do you know if you are on the correct wave count? To get better confirmation, you pull out the guidelines. These are the guidelines. So wave 2 retraces 50 to 61% of wave 1. So if we measure from here to here, 2 should at least come 50 to 61.8%. Obviously, this is just a guideline and doesn't happen every single time, but if it does happen, it's just further confirmation that you are in fact on the correct wave count. Wave 3 extends 161.8 of wave 1. Okay, wave 3 is usually 161.8 of this. So if wave 3 moved $10, 161.8 of that means that it is 1.618. Okay, so wave 3 should have moved at least $16.18. Okay, something like that from 2. Okay, wave 4 retraces 48.2% of wave 3. Okay, these are the common levels, but doesn't happen all the time. These are the common levels. Wave 5 targets 61.8% or 100% of wave 1 to wave 3. So wave 5 is usually 1-to-1 of wave 1. Usually. Again, not all the time, but most of the time. And then you've got ABC. Wave C usually is the same as wave 1 and 61% retrace of the trend. Okay, which is this entire thing. Because remember, this is in fact a wave 1 and this is a wave 2. So if we're following this rule, it should retrace 50 to 61.8%. Okay, everyone okay for now? Anyone confused? If not, I'm gonna move on. If you're confused, just let me know in the chat box. Okay, we're almost done with the slides, and then we're gonna go on the charts to do a practice session. The rest of it is basically just examples and guidelines, okay? These are just examples and guidelines. I can go through it very quickly. In the meantime, if you guys have any questions, do ask me in the chat box right now so that I can answer them quickly and then we can move on. Okay, I've got a question on the Vantage app. Do Elliott waves actually work or is it just hindsight analysis? Okay, that's a very fair question. Okay, many people actually misuse Elliott wave by overfitting in hindsight. Okay, they are trying to force a wave count. You cannot force a wave count. But when applied properly with clear rules, like wave 3 cannot be the shortest, wave 2 cannot pass wave 1 and wave 4 cannot overlap wave 1, it becomes a structured framework for forecasting. The key is, following the rules very closely and trying to follow the guidelines closely as well. So like I mentioned, I am a Elliott wave trader. To be very clear, I have made a lot of profit from using Elliott wave. There was actually a single trade where I made 10% in a single trade. Okay, I don't know what 10% mean to you guys, but I'm trading on a $300,000 account. Okay, so 10% to me is $30,000, right? So I'm very happy with that results. And that was a trade that was given to me by using Elliott wave. So I personally, I vouch for Elliott wave a lot. If you guys can master this, I promise you, you will make a lot of profits from the markets, but you do need to master it. And when I say master, I don't mean you need to memorize. I trade with Elliott wave. I've been trading with Elliott wave for years, and I cannot remember a lot of things. A lot of times I just go online, I have a guidebook where I just reference, and then I just follow it as closely as I can. So the common guidelines, these are the things that I have in my guidebook where I come back and reference, like, okay, wait, what did the guidelines say again? And I come back and reference. Okay, so the guidelines of equity says that 2 of the motive subwaves in a 5-wave sequence will tend forward equality and is gradually true of the non-existent wave. This means that when the wave 3 is an impulse wave, it is an extended wave, and wave 5 is usually the same length of wave 1. This useful information is important because when you see wave 3 being very long, like very, very long, usually 1.618, that means you already have a rough forecast that wave 5 is going to be the same length as wave 1. Okay? So by using whatever information is already on the charts, you will be able to predict what is coming if you continue to use Elliott wave. Okay, so if I see that wave 3 is super long, I already have a rough idea that wave 5 is going to be the same length as wave 1. Okay, so that is I'm just giving you guys a few guidelines. Okay, the next one, the guidelines of alternation within an impulse says that the form of wave 2 and wave 4 will alternate. That means if wave 2 is a sharp style correction, wave 4 is going to be a sideways correction. Okay, so if wave 2 is going to do a very deep correction, here, that means wave 4 is going to do a shallow sideways correction. I'll give you guys a very good example when we go to the charts shortly, because it is happening on gold right now and it's happening on Ethereum. Yeah, it should be happening on Ethereum right now. Okay, guideline number 3. The alternation within correction says that the form of wave A and wave B will alternate within 3 wave corrections. Okay, if wave A is a flat type of correction, wave B may be a zigzag type and correction, and vice versa. This also states that if the correction begins with a more simple wave for wave A, expect wave B and C to be more complex. Okay? So if wave A makes a lot of sense, it's very easy to understand, it's doing a very clean ABC, then wave B and wave C is going to be complex. Okay, this is a very good example that is happening on XAU USD at this current point of time. I remember it so clearly because I have been following XAU USD for months or weeks now, and it is in the wave 4 and it is very boring. Okay, just a fun fact, wave 4 is the most boring wave, and it is the wave that is meant to bore people and kick people out of the markets because they're so bored, they get shaken off of the markets by playing the wave 4. So that's why I say always trade wave 3 and wave 5. Obviously, wave 4, you have to wait for wave 4 to end. It's going to take a long time. It is the longest and the most draggy wave. Wave 4 is the longest and most draggy wave. XAU USD is currently on the wave 4. I'm going to show you that once I'm done with these slides, okay? So the guidelines of depth of correction wave says that when the market goes into correction, it often will correct to the territory of the previous wave 4. Okay, so if we're done A, B, C, D, E, and then we now start with the A, B, C. A, B, C often, not all the time, will go into the territory of the start of wave 4. Obviously, not all the time, but most of the time. Okay? Next guideline. The guideline of scale is really a technique of looking at a market and is often applied when creating channel projections. It simply states that one should use both an arithmetic scale chart and semi-long scale chart when looking at Elliott wave. Arithmetic scale charts are good for looking at waves on lower degrees, but semi-log scale charts are good for bringing large trends. Okay, we can ignore guideline 5. Sorry, there was actually a chart that I put on to explain it, but I think it's not that important, so I did remove it. Okay, the next one is correction wave. So we look at Elliott wave. It always moves in, always moves in 1, 2, 3, 4, 5. Okay, for wave 1, 3, and 5, it's always going to move in 1, 2, 3, 4, 5. The problem now is for people who want to trade wave 2 and wave 4. Remember, guys, I can tell you guys, I am quite profitable. I won't say I'm very profitable in trading. I am fairly profitable in trading. I'm happy with my results in trading, and I do not trade wave 2 and wave 4. If you want to trade wave 2 and wave 4, you can. Just know that they are dangerous in it. So for the purpose of this webinar, I'm still going to teach you guys wave 2 and wave 4 anyways, but my advice is to not trade wave 2 and wave 4 and only trade wave 3, and 5. You do not need to chase every trade. Don't chase every trade. You are going to get burned. Okay, so anyways, let's just go into wave 2 and 4 anyways. Okay, wave 1 must be an impulse of a leading diagonal. Okay, so it's usually a 1 A, B, C. Wave B can only be a corrective pattern. Wave B must be shorter than wave A by price. Wave B is likely to retrace 638.2 or 61.8 of wave A. Okay, wave C is likely to have the same price length as wave A or 161.8 of wave A. If wave C is more than 161.8 of wave A, then probably the probable beginning of an impulse pattern. Okay, so these are just guidelines. I'm gonna keep this here if you want to take a picture or a screenshot, but otherwise I personally do not trade wave 2 and wave 4. Okay, these are other types of wave 2 and wave 4 variation. So wave 2 and wave 4 can come in many, many variation. Wave 1, 3, and 5 always moves in 1, 2, 3, 4, 5, but wave 2 can move in 3, 3, 5, 3, 3, 5, 3, 5, 3. There's many, many patterns that it can. So there's, for me, it's like, why are you trying to figure that out? Why don't you just trade the easy parts? Okay, so it comes in flats, where it kind of is a flat pattern. It comes in irregular or expanded flats. It comes in running. Okay, it comes in many, many different patterns. So I'm just going to leave this here again in case you guys want to take a photo. Cool, everyone good? This is another example of what happens on wave 2 and 4. Usually this happens in wave 4, a triangle. Whenever you see a triangle on the charts, it is most likely to be a wave 4 of Elliott wave. Okay, if you want a chart and you see a triangle, it is most likely to be a wave 4 on Elliott wave. Okay, I'm gonna stay here so that you guys can see this. A triangle usually moves in A, B, C, D, and E. Okay, it usually moves in A, B, C, D, and E. That's why I say wave 2 and wave 4 have so many variations. Like, as a trader, you want to make your life easier and not try to trade the different variations. It's easy to just trade 1, 3, and 5, where it's always moving in 1, 2, 3, 4, 5. Okay, finding potential setups. This is where I go into the charts. This is our handles. This is Vantage handles. Can follow them on Facebook, Instagram, Twitter, I mean X, LinkedIn, and Telegram. So these are the handles. If you guys want to take a photo or whatever, you guys can. I'm just going to stay here in the meantime. Can you guys let me know if you guys have any questions, if any of you are confused? If you have any questions at all, those who are on Zoom, do let me know if you guys are good. Those who are on Vantage app, let me just check. Hey, Vantage app moving really quickly as usual. Let me just scroll to see if I have any questions. Okay, I've got a question here on Vantage app. Which time frame works best for Elliott wave? Elliott wave works on all time frames, okay? Because crowd psychology exists everywhere. Investors use it on monthly charts to predict multi-year cycles. If you use it on lower charts, obviously it's gonna be helping you for like day trading or like scalping. But no matter what time frame you use it on, you need to start on the bigger time frame first to get your correct wave count. You need to get the correct wave count on the bigger charts before you can go down to the smaller charts. So I'll show you guys what I mean. I'm going to pull out the charts now. Okay, let's start with Ethereum. Look, I'm on a wave count right now. So I guess we were talking earlier on. I'm gonna redo this analysis. Duplicate. Let me just redo this analysis. Screenshot so that I can reference this. Hold on, guys. Where's my screenshot? Okay, I got my screenshot. Now I can erase the charts and then I can start all over again. Okay, so how did I come up with that alias wave analysis? Let's start from the weekly chart. You need to get your wave count correct on the bigger charts before you can go down to the smaller charts. Okay, so 1, 2, 3, 4, 5, let's start. You go to the 1, 2, 3, 4, the fourth one, pull it out, and you see Elliott waves here. Press 1, 2, 3, 4, 5, and you should be able to start. 1, 2, 3, 4, and then this should be a 5. Okay. I can't remember exactly, but I think I should be on the correct wave count. Sorry, this should be the 5. This is a super long extended 3. Okay, it's a super long extended 3. Okay, nothing has broken. Can see the rules are intact. Wave 2 did not surpass wave 1. Wave 4 did not surpass wave 1, the top of wave 1. Okay, so everything is intact, and wave 3 is the longest. Okay, so this is a wave count that should be correct. I hope it's correct because I've been using it for a long time. And then it follows by A, B, and C. So this is a very clean structure. And now we start with wave 1 again. So remember, it's A, B, 1, 2, 3, 4, 5, followed by A, B, C down, A, B, C, and then followed by 1, 2, 3, 4, 5 again. 1, 2, 3, 4, 5. Okay. Okay, so I've got here a 1. It should be a 1, 2, 3, 4, and 5. Okay, you know what? It looks like I'm on the wrong wave count. Oh no, I am. I should be correct. Okay, and then now we're doing an A, B, and then C. And now we start with this wave count. Okay. If my wave count is correct, if I'm not on the wrong wave count, we should be at 1, 2, 3, going into 4, and then 5. Okay, how am I confident that this is the correct wave count? Because at this current point of time, anyone can come on the charts and just keep charting 1, 2, 3, 4, 5, A, B, C, 1, 2, 3, 4, 5, right? And you don't know if it's correct or not. Okay, so why I'm a bit more confident that we are in fact on the correct wave count in this part here. Remember, we are on the weekly. We're going to slowly move down the time frames in a while. Okay, because remember the guidelines? The guidelines say that wave 2 is usually 50% or 61.8% of wave 1. So if I pull the start of wave 1 and I pull it to the end of wave 1, you can see price stopping exactly at that 50% mark. Okay, I'm gonna get rid of this 2. You can see price stopping exactly at the 50% mark. So it kind of gives me confidence, okay, I should be on the correct wave count because wave 2 is following the guidelines really nicely. Okay, the next guideline, wave 3 is usually 161.8 of wave 1. Okay, for those who are confused, let me pull out my slides again. Where are my slides guidelines? There you go. Nope, I don't want this. Oh no, how do I get this card? Okay, yeah. Okay, I'm gonna pull this over so you guys can see what I'm talking about. This guideline here, don't know if you guys can see it. Okay. Wave 2 usually retraces 50% or 61.8% of wave 1. Wave 3 usually extends 161.8% of wave 1. So right now, so far, the first part has been completed, 50%. Okay, now how do I know it has pulled 161.8? I go to this one, Elliott correction wave. I need the 3 points. So I need the start of wave 1, the end of wave 1, and the end. Oh no, I clicked the wrong one, sorry. I need this one. So trend-based fib extension. I need the start of wave 1, the end of wave 1, and the start of wave 2. Sorry, the end of wave 2. And then I can choose what levels I want, and I chose 161.8. You can see how price, wave 3, ended nicely, is nicely at the 161.8%. Do you guys see that? Do you guys see how everything is playing out nicely? Take note, I could still be wrong, by the way. I could still be on the wrong wave count, but so far, it's giving me clarity that I am correct. Okay, everyone okay? Those on Zoom, Kiola, Andy, Romuald, Joash, Brian, Bob, Muhammad, everyone good? Everyone seeing what I'm showing you guys? Zara, Thing. Okay, so based on the guidelines, you see, the thing about trading, right? Nothing about trading is like emotional. Everything about trading is logical, and everything about trading is it's logical, it's based on data, it's based on like facts, right? So there's nothing that I'm doing is just based on my own emotions and my own feelings. I'm literally following a guide. This is the guide that I'm following. I'm literally following this guide, and I'm following the 3 golden rules. So the 3 golden rules is that 2 cannot surpass 1. It did not surpass. 4 has not happened yet, so I don't know. If for some reason price pulls back and it goes surpass this one level, right? It surpasses this one level or overlaps this one level, then I know for sure that I'm in the wrong wave count. But at this current point of time, there is nothing that is indicating to me that I'm on the wrong wave count. Okay, at this current point of time, so far, I'm following the guidelines really closely. Okay, so now wave 4 retraces 38.2 of wave 3. So this is wave 3. This part here is wave 3. I now need to take the start of wave 3 and the end of wave 3 and now pull out, what did the guideline say? 38.2. Okay, to be very fair, that is the common level, but sometimes wave 4 ends at 23.6, 38.2, or 50%. It doesn't always end at 38.2. It's just that 38.2 is the most common level. So based on what I think is the most common, is most likely to happen, I'm just going to put my target for wave 4 here. Okay, my target for wave 4 here. And then now I can measure where I think wave 5 is going to be, because if I pull out the guideline, wave 5 is usually 61.8 or 100% of wave 1 to wave 3. But then remember the guidelines I showed you guys just now. This one. If wave 3 is extended, that means wave 5 is most likely going to be equal heights of wave 1. Okay, so we already have the height of wave 1. So how do I measure wave 5? I take this trend-based fib extension. I take 1, the start of 1, the end of 1, and then I'm going to put it where I think wave 4 is going to end. I click on this area and I pull out 100% because it's 1 to 1. So based on the guidelines, this is where 4 is going to end. This is where 5 is going to end. Okay, so do you guys see how with Elliott wave, you are able to kind of forecast or predict where the movements are going to be? You can predict so far in the future, because now I know where 5 is going to end. I have a rough idea where 5 is going to end. I can start with ABC. Remember the guidelines say that A, B, C usually pulls back to where 4 ends. So we already have a rough idea where ABC is going to end, and then we can start with 1, 2, 3, 4, 5 again. Obviously, this is not real-time information. This is just a forecast. So if later when 4 ends, I'm going to have to adjust this according to the ending of 4. Okay, I'm going to have to adjust this based on the ending of 4, because although 38.2 is the common area where 4 ends, sometimes it ends at 23.6. Sometimes it ends at 50%, but very, very rarely it goes past 50%. So right now, I already have a rough idea where 4 is going to end. It's going to end somewhere within this box, more likely going to end at the 38.2. Okay, so now I have a rough idea what's happening. I can go down to the smaller time frames. I'm going to go down to the daily. Right, I'm going to go down to the daily. By the way, there are subwaves within subwaves, so you can see 1, 2, 3, 4, and 5. Okay. You can plot within, and then you can plot A, B, C. A, B, and C. And now I can plot 1, 2, 3, 4, 5. 1. It doesn't have to be perfect, obviously, but okay, let's say it's this. 2, 3, 3, 4, and then 5. Okay, something like that. Something like that. Okay, so basically this is my rough wave count. So I think I could be wrong. I could be very wrong. I think we are in the wave 4 of Elliott wave for ETHUSD. So where do I get in for the buy? I know wave 4 is going to end and I'm going to have to get in for a buy, right? I'm going to have to get in for a buy somewhere. I know the buy is going to happen somewhere within this green purple box. Where in this purple box is it going to happen? That's where you pull out confluences, okay? That's where you pull out other things that you have learned in trading and Forex and like whatever it is you're doing. Okay, so when I say pull out other things, I now pull out support and resistance. I now pull out indicators. I now pull out other things. The more things lining up in this area, somewhere within this green box, that is where my most likely entry is going to be for the buy. Okay, so the thing about trading is number 1, you need to master trend. You need to know where price is moving. Is it moving up or down? Okay, so based on the charts right now, if we are going in a wave 4, right now it's going to do a short-term movement down. Okay. You can play the sell. I just personally would not do it. I rather wait for the 4 to end. Right. I know some people must be thinking, why don't I just get in here for a sell then? You can if you want to, it's just risky. It's risky because 4 can move like this. It can move like this. It can move whatever pattern it wants to move because 2 and 4 has so many variations. Why don't I just wait for 4 to end and I start playing the 1, 2, 3, 4, 5, right? Isn't that easier than trying to figure out where? Okay, so I know 4 is going to end somewhere here. That means somewhere within this purple box, this is where my entry is going to be. I know where trend is. Trend is moving upwards on a long term. Therefore, on a long term, I want to be getting in a buy. Where do I get in for a buy within this purple box? Either here, here, or here. Which one of these 3? So A, B, C. Where in ABC do I get in for the buy? B is the most likely favorite, but it doesn't happen all the time. It's just a favorite. Okay, so now I move down to the smaller time frames. And I look for other things like support and resistance. Okay, so support and resistance, I'm going to look for swing lows. There's a swing low here. There's kind of like this overlap thingy happening here at the 38.2, and then there's this swing low here. Okay, you guys see that? So structurally, I'm going to pull out my zones. Okay, so there is a swing low happening here. The more things lining up in the area, the more likely I am going to get in that area for the buy or the sell. And this is the last one. Yeah. Okay, so why am I highlighting these 3 zones? Because these are where most likely price is going to reverse and start the wave 5. So I can now eliminate my purple box. My purple box is no longer where I think price is going to reverse. I know it's going to reverse. It's just whether it's going to reverse in this green box, or this green box. So I'm going to get rid of this and change it to blue and change this to maybe yellow. Okay, so it's either going to reverse on the green, the blue, or the yellow. Okay, I'm at this current point of time, I'm going to get rid of the green. Okay, why am I getting rid of the green? Because remember what the guideline says. The guideline says if, okay, I need to pull out the guidelines again. Which one was it again? I think it's this one. Okay, if wave 2 does a deep correction, wave 4 usually does a sideways correction. Okay, if wave 2 does a deep correction, wave 4 usually does a sideways correction. So if we pull out wave 2, remember wave 2 already did a 50% correction. It did a 50% correction. So 50%, in my opinion, is considered deep. Therefore, I think wave 4 is going to do a shallow correction. So I don't think wave 4 is going to do 50% as well, because wave 2 already did a 50%. So I think most likely wave 2 is going to do either a 23.6 or the 38.2. Obviously, 38.2 is still the favorite at this current point of time, because commonly price goes to 38.2. Okay, so is it going to reverse now at the 23.6, or is it going to reverse at the 38.2? Okay, I'm going to tell you my honest answer. I think it's going to be 38.2. I think price is not going to reverse right now. Why? Because if you zoom in, you can see price already broke structure. There's already a breakout here. This could be a fake out. It could be a fake out. It's too early to tell at this current point of time. But it looks like it already broke this structure and it wants to go lower. And it doesn't look like there's any signs of reversal. It looks like a very clean downtrend even. Right? It looks like a very nice and clean downtrend. Okay, so I personally think price is probably going to go to this 38.2 area, which is the 3,751 area. And then I'm going to, this is where you can consider getting in for a buy and play the wave 5, and you already know where wave 5 is gonna roughly end. Okay, I really love Elliott wave. Okay, I tell you how much I love Elliott wave. Okay, let me start on the weekly. So I was plotting Elliott wave back in 2002, where price dipped to 1,000 to 800. I didn't get in at 800. I got in here. I got in around this area. I got in at $1,200. Yeah, I got in at $1,200. This was my entry back in 2002. I held my Ethereum all the way to recently. I just got out here at 4,600. I made like more than 300%, and I did it using Elliott wave. Okay, it's very silly because I should have gotten out here at the first wave 5, but I was pregnant and giving birth during those time. I literally just gave birth here in November of 20 and 24. I literally just gave birth, so I was not looking at the charts. So it went to the high and it started the ABC. I should have gotten out here. If I was looking at the chart, I would definitely have gotten out, but I was not looking at the charts. Anyways, I just recently got out at the end of wave 3. I got in here at the start of the end of wave 2 and the start of wave 3, and I held it for 3 years. Actually, yeah, I did. I held it for 2 years. Well, coming 3 years. I held it for 2.5 years, and I made more than 300% on this single trade. It was hundreds. It was more than 100,000 in profits. So I'm very happy with Elliott wave. If anyone tells you that Elliott wave doesn't work, they can come look for me, because I can show you my results and I can tell you Elliott wave works for sure, if you master it correctly and if you are on the correct wave count. If it's not on the correct wave count, you are going to lose a lot of money. But that's not just Elliott wave, that's everything in trading. Okay, so that's all I have for you guys today. I hope you guys learned something from me today. I will catch you guys next Tuesday, I think. Yeah, next Tuesday. Take care. Happy trading, and hope you are profitable. Okay, I hope you are very profitable. Bye, guys. Take care. Bye.